Today, let's talk about some basics. We start each class with some basics and then we will see how we interpret the data or what does the platform basically, how does it help is what we basically look at. Now, all of you know 915Trade.com. I'm not going to get into the basics of Nifty options, call, put, sellers, buyers and all that. I'm assuming that you all are already aware of all of that. In case if you are not, you can message me. We will see if we can do a quick rundown on how basically these things work. Our platform, the whole idea behind the platform is instead of looking at data from the point of view of charts, right? This is how it is, right? So if you are introduced to trading, this is how you are introduced to. This is basically it, right? So everybody will talk about things like, it is a market of, or it is a platform where demand and supply do their dance. But once they start talking about how do you go about trading, how do you develop your skill, it all comes down to charts. And when it comes to charts, doesn't matter where you are, predominantly it is all around price. So you will have, you will be taught either, whichever platform you choose, you have a trainer or you have got YouTube, whatever you choose, everything is around the price. So if you come with YouTube or if you are looking into TradingView, it is predominantly price. 90, 95, 99%, in fact, everything is based around price. They do something with volume also, volume profile, fixed range volume, etc., etc. But then price does take a center stage in any platform for that matter, all over the world for that matter. This is the same thing. The only thing that basically goes a little away from purely price based to something else or gives a little more importance to volume is your footprint chart. Footprint charts are the only one which give a little more importance to your volumes than the price. So what footprint does is it basically in that candle, it tries to show how many sellers, how many buyers and at what level sellers and buyers were there. So that's all it. But again, that also tries to show it around the price itself for the candle. So our idea was to see, can we ignore the price? Because price is an after effect of volume. If you want to look at it that way, right? We wanted to see if we could look at the entire data in a slightly different way. The first thing that you learn as a trader is the art of demand and supply, saying that the whole art is about demand and supply. If the demand is more, price will go up. If the supply is more, price will come down. As simple as that. Question is, how do we see this demand and supply? If we cannot clearly see this demand and supply, and this is an example that I give in every class, I look at it as a fish market where fish is being sold. Assume that fish of the entire city is sold only in one place, government controlled. The sellers and the buyers, both fish sellers and fish buyers, they have to be in the same market. And there are only two shops. One shop basically where all the fish sellers can sell. The other shop is where the buyers have to buy. Simple. So when that happens, imagine if you are standing around, if you're just standing there and if you're looking at what's happening with the market. And if somebody asks you saying, will the price go up or go down? Just observing the market, you will be able to say, because the supply and demand is right in front of you. You are able to see how many people are selling, how many people are buying. If the sell queue is more, if the buy queue is more, what is in the stock? Depending on that, you are able to easily say, I totally get it. I know whether the price should go up or price should go down, or if there is a tough competition saying that demand and supply more or less is matching, so price might not go anywhere, right? Standing there, it becomes very easy. Now, when I'm looking at data and with so much technology, can we see the data from that point of view? That is the whole question that we are trying to answer. Saying, can I see demand and supply in a pure demand and supply manner? And then I will decipher what will happen to the price. I will not decide anything based on price itself. So whatever we are going to explain to you in the next 4-5 days, we will not tell you, oh, because price did this, that's why you do this. That I don't think ever comes up. We do respect price, but only very few minor occasions where we tell you saying, do look at the price. But otherwise, predominantly we look at demand and supply, predominantly we look at volume. Because if there is no volume, the price cannot move. So volume has to be there for the price to move, and the volume has to be able to be differentiated as a buyer side volume and the seller side volume. Only then we will be able to say, okay, what's happening in the market? I think I get a sense of it. That is all that we try to do. So if you look at our platform as well, you have got 4 charts. The 4 charts, we don't want to complicate things. We want to keep them as simple as possible, because if we complicate it, it's not going to be easy for anybody to follow. Already there is a lot of data. There's a lot happening already. For example, today morning, it was difficult to follow to which way the market was going. It is already difficult. Trading is not easy. Trading is a difficult thing. You need to pay a lot of attention. You need to understand the data like any other field, right? If you are into IT, for example, you need to know the skill, which software, which programming language, which database, etc., etc. If you are into manufacturing, you need to know which engine, which machine, who is supporting, and what is the output, what is the cool down period, etc., etc. A lot of things you need to know about that sector. Only then you will be confident. And you need to know what has happened in the last 10 days, for example. You need to have continuation of what's happening in the market. Only then it will become a little easy. It becomes easy if you have the context of what is happening in the market for 8-10 days. It becomes a little easy to say, I know what is going to happen at a particular place. And then you can evolve your ideas and then look at the data and try to make it easy. So please do not think that trading is easy. You will have to apply yourself. You will have to be able to understand the data properly. And then it becomes a little easier. easy, but you will have to work for it every single day. It's not like you are going to work today and then that's it done. Eventually, it is the same thing that you will keep repeating it. You will have to be at it every single day. Then it becomes easy. It definitely becomes easy. Towards the end of the class, you will definitely realize that it is not going to be as challenging as many people portray it, or as challenging as it has been already for you in your trading journey. To keep it simple, we have got just 4 charts. The first chart essentially shows you the buy and sell volumes from the futures point of view. So if you're looking at Nifty, for Nifty, what is the buy volume in the future and what is the sell volume in the future? How are the buyers versus sellers behaving in the futures area? Okay, that is important. Then this is just a difference line, which is nothing but buy minus sell. If buyers are strong, this line will be above 0. If sellers are strong, this line will be below 0. As simple as that, because this is buy minus sell volume. You then have a trend line. I will talk about it in a little while. Then we have got Nifty spot candles. We look at only spot candles because the ATM strike is decided based on the spot price. And because of that, we track the spot price here. The futures price follows the same pattern. It doesn't change. The pattern remains the same thing. Just that futures at the beginning of the week will be far away from the spot price, and eventually at the end of the week on expiry, it comes close to the spot price. And then futures at times, especially at the day beginning, has slightly different price action compared to spot. Especially I have noticed this at the day beginning. Otherwise, the overall price action remains the same thing. Okay. So notice that at the beginning of the day, futures potentially could have slightly different price action compared to spot. I have observed it myself. But otherwise, overall, they are supposed to follow the same price action. Spot obviously does not have volume. Volume is only there in futures, so we only focus on futures. On this side, we show you ATM strike, lower strikes, 5 strikes below and 5 strikes above. What do? We show ATM strikes. For example, I have enabled this at the bottom right corner, which basically shows me 5 above strikes and 5 below strikes. I think I've told you 5 below and 5 above because I have enabled this. If I disable it, by default, it comes like this. So you have got strikes below and strikes above. This is how NSE also shows. But if you just enable it, now you have got 5 above and 5 below. If this is convenient to you, you can obviously follow this. You have sellers at the top and buyers at the bottom. Any stock market, right? You will always have sellers at the top and buyers at the bottom, right? So from that point of view, if you just want to measure the same from price, if you want to compare it, right, it becomes easy. It also matches the price, saying if it is going up, which direction to go and which direction to come down. And then it also becomes easy because at the bottom, you will want your put sellers to be extremely strong. At the top, you want call sellers to be extremely strong. So this shows you call sellers and put sellers. And I keep referring this as call sellers house, put sellers house. This is a competing house always. If the market already has a fair value price, right? Because there is another belief that says that market always tries to find its fair value for that day. Why did the market move today? Because the market participant wanted to discover what is the fair value, and they realized that the fair value today is 25,000. That's why the market was around, that price. In the process of discovering the fair value, obviously this plays a major role, right? At 20, if the market has to be at the exact fair value, okay, assume that the market has found its fair value, then calls will be extremely strong on this side, puts will be extremely strong on this side, because they both agree that the price has to remain there and market has to go sideways. We'll talk about sideways market, how to identify and all that eventually. But then if the market has found its a fair value, which means that it can neither go up nor go down. For today, that is the fair value. So if the fair value is arrived and if the market is extremely fair, then call sellers will be extremely strong on this side, put sellers will be extremely strong on this side. Price doesn't go anywhere, right? Because every day we discover the fair price. Every day through the auction process, we want to discover the fair price. The price keep moving up and down, and towards the end, it will come to its fair value price. And even if it doesn't come to, we call that as the fair value price, right? That's how the price basically operates. Any asset you look at in the world, that's how the market's auction structure and bid structure basically works. Like I said, you have ATM strikes, you have upper strikes where calls must be strong, you have lower strikes where puts must be strong ideally. But many a times what happens is you will realize that puts are extremely strong and calls are not strong at all. You will also realize that sometimes calls are extremely strong and puts are not very strong. So it is those days where you will have a extremely good clarity as to what is going to happen. Doesn't necessarily have to happen on any day. It basically happens during the day. It can happen every single day. You will be able to realize that, there are moments when you can say that, yeah, I know who has a little more power compared to the others. That is your opportunity where you should be able to make some money, right? That's all that we are trying to identify. We want to identify places where we would be able to make money, favorable places where we are confident the price is going to move in a particular direction. That is all that we are going to look for, and that is all that we are going to learn. Because if we learn, end of this class, if we are able to learn that I know for sure that the price can move 100 points up or 100 points down, then we have achieved something. If we are able to then read it consistently, and if we are able to execute our trades based on that consistently, it means that we have definitely become a pro trader. We just have to consistently do that over a period of a few years to be able to make a decent capital. That's all there is to it. I've not explained about the trend line. Now the trend line in our platform, so you will see that most of the places, right, trend line is basically is like this, wherein EMAs can be called as a trend line, or some people draw a line from here to here and they call that as a line, and they draw from the lows. They take the highs, they take the lows, whichever side it breaks, because it broke on the upside, they will basically take a trade up, call trade from here or buy trade from here, and they'll try to go up. And then again they will draw. If it breaks on the low side, they will sell from there and they will go low. That's how basically trend lines are drawn, or they are basically drawn basis EMAs and SMAs and all that. What we do is we don't draw trend line based on price at all. Our trend line is completely based on volumes, purely based on these volumes. So what this basically does is it tells you whose pressure is basically more or whose pressure is building. That it will be able to tell you very clearly. Today the market was a little confusing, but then the market did eventually play the same confusing role eventually, right? What happened was the market initially started with a negative trend value, let's say. I'll tell you what we call this, but it started in negative and then immediately it went to positive. Was not able to sustain, and then it came back down again. Then once it came back, it fell sharp. That was evident. Then again, some reversal was there. It couldn't continue to push up and then came down, etc., etc. If you look at the trend line and if you look at the price, you will see that actually, many times I myself say this, right? Astonishingly, they basically mimic the same thing. If you want a trend line to mimic the exact price action, it has to follow the price. It has to be an EMA line very close to it, like, 8 EMA, 12 EMA. Only then it will basically look exactly like the price action. But we are telling you that this trend line doesn't look at the price at all. We don't even consider the price of Nifty futures or options, any assets price. We don't look at any price at all when calculating this trend line. And then if the price action matches the trend line, you will have to understand that this is the truth, because it should immediately give you confidence that you can trust this 100%. Because if there is something that is not looking at the price and just simply drawing based on volume and the price is responding it, that means these volumes can be trusted and you can 100% rely on these volumes. Obviously use this to your advantage to see what kind of a trend you can take. So that is what this essentially tells you. And that is all about trend line. So 4 charts I have told you. You have got futures buy and sell, you have got trend line, you have got spot candles, and also you have got strike wise buy and sell. Whether you look at Nifty, whether you look at Bank Nifty, Sensex, anything you look at it, it is exactly the same thing. We don't change anything there. They all follow the same structure. I hope you got that clarity. And what we will now do is we will try to identify how do we read some of these data elements. Now, before I explain to you as to how do we go about reading this data, I'll obviously go to historical data and try to identify how I go about reading this data. But before I do that, the whole idea about taking this class is not just to give you an understanding of the platform, not just to reveal certain strategies. And we will be revealing some strategies. Obviously, we will tell you how few strategies that you can use to your advantage. You can develop your own strategy. Obviously, if you have your own strategy, you want to just combine what we have on the platform, well and good. Of course, you can do that. But what we would also like to do is we would like to give you a challenge, and the challenge is, as a buyer, if you are an options buyer, we want you to be able to achieve 100% of your capital month on month, and we want you to be able to achieve somewhere, let's say at least 10% of your capital month on month as a seller. I'll tell you again. The challenge is, what we want you to do is we want you to be able to achieve 100% of your capital as a buyer and then 10% of your capital as a seller. That is what we want you to target and we want you to achieve. Now, if you are able to develop a strategy, understanding and skill to achieve that by the end of this class, we all are successful, right? Because then all you have to do is consistently repeat doing the same thing over and over and over and over again. That is what markets are known to. What keep doing it for years and years and years, and eventually at some point in time, because of the compounding effect and because of, obviously, you will be improving in your lots, in your size of your lots and all that, so it will get compounded, and over a period of time you will be able to build a very good capital. So that's why we are here. We want to be able to build capital through options, right? Don't try to think that you'll be able to make 1000%, 800% and all that. Those targets are difficult to achieve. We do not want to give you any unrealistic targets. At the same time, we are not saying that, oh, you will 100% achieve this. There's no way you cannot achieve that or anything like that. What we are essentially saying is, please do not take this as a commitment from our side, or do not take this as one of those Telegram sales pitches, right? Wherein we are not saying you will definitely achieve kind of targets we are talking about. What we are saying is, we definitely want you to achieve it, and to achieve that, we will give you enough information, enough data and enough strategies. We'll give you the skill is what we will try to give you so that you would be able to achieve. I know for sure that you will be able to achieve, but it is all up to you whether you are able to understand, follow up, do your assignments properly, and then if you are able to develop over a period of 1 week, and later that, after that also you will have to obviously keep repeating and keep doing your assignments and keep looking at the data. I think you will definitely be able to achieve it. So it is a lot with you. We will give you all the skill required. If you practice and if you perfect, you will be able to achieve the target. You will be able to overachieve it for sure. But then the idea is not to oversell anything. We just want you to consistently make that 100% and 10% as a buyer and a seller. I think that will be a huge achievement. If you are able to do it for the next 1 year, you are successful and we are successful. That is what we want to achieve with this class. Instead of just telling you the platform, the product and strategies, and if I just leave it there, it might not be very fruitful. But because now I am saying that you will have to achieve this kind of target on a month-on-month basis, then everything that I explained to you, you will see from that prism, and you will want to say, with whatever I'm learning, is it possible for me to achieve that kind of a target? At the end of the week, I want you to come back and tell me saying, are you confident enough to say that you will be able to achieve these targets or not? The answer usually is a resounding yes every time we do these classes, but then I'll leave it to you. There's no pressure. If you think this is not working out for you, you're not able to understand, you don't think this will work for you, we're happy for you to explain that to us or tell us, and we will be able to look into and see if we are able to help in whatever situation you are in. But it is important that whatever we explain, you understand, you do your assignment, so that way you become perfect, right? Irrespective of how much we explain, you will not be able to learn it better unless you do your homework and your assignments. Okay. Now, that aside, now you know the agenda, right? The whole goal, the end goal of this class is to be able to get you to that kind of a situation. Now, how do we go about it? We need to understand the basics of the platform, which I have just now explained to you. If you need any more details, you can keep asking questions in the Q&A session. But at the same time, we need to keep looking at data in a slightly different way. You have to keep improving, right? And that is exactly what we will try to do. Now, let's look at data. I want to look at today's data. Usually every class, one day or the other, I get brilliant opportunities to explain whatever I explain in the class. I would be able to present it in the same day. Unfortunately, today I don't have anything like that, but let's see if we can make sense of the data. For example, if you look at Friday, right? Friday, the market looked kind of bullish. Price was just going up and this was also going up. It took a rejection at 24,900, yes, but then it was up. There was no real pressure from the sell. They held it at 24,900, but there was not much pressure. Historically speaking, I knew that 25,000 was the resistance. If you look at the data a few days, 10 days, 12 days data back, you know that 25,000 has always, it is kind of beaten the price up and said, just run away from me. That's how strong 25,000 has been in the past. With that, I knew that the price is going to be difficult to cross 25. It doesn't look like it is going to come down. So it should ideally open gap up and it should aim for 25,000, take one rejection from 25,000 and come back. That was my view on Friday. So what happened? As soon as the market opened, it opened slightly above 24,900 or below 24,900. The first 1 minute itself, it opened slightly above 24,900 and then it took a huge jump. It went straight to 25,000. Now, as soon as it went to 25,000, I was a little bit nervous. If I was already not in a position, I was not, to be honest, very strong about taking a buy there. Okay. However, let's look at the data and see what is happening. What is the data telling us at 9:15? This is telling us there is something called as a bias, right? I keep explaining that about every single class. What is a bias? A bias essentially should tell you saying that are call sellers strong or put sellers are strong. If you know that, if you are able to understand the bias, you can confidently then say whether you are going to go with call buy or put buy. Trend line simplifies that to a great extent. If it is negative territory, you can definitely say that, okay, bias is negative, so you're more or less trying to go for a sell position. If it is positive, then you can say that, okay, it is positive. Can I look at a buy positions? But then don't blindly go. We will explain how you can evolve this into a much better strategy wherein you can confidently say that I can take a buy or a sell. Okay. But remember that whenever we say bias, that bias comes from a simplest way of the bias is basically from trend line, where trend line is. For example, when it is good crossing zero, we know that now it is a positive bias, so price is moving up. But whenever it takes a sharp rejection and comes down, we are not very confident of those levels, right? And then it takes a rejection and obviously it comes down. But then we'll talk about that a little later. No need to get confused. At 9:15, when you're looking at this data, we know that 24,800 had a huge support. I'm looking at it the reverse way. The puts were extremely strong here, but 25,000 in the morning itself had built up here. Already they were building positions there. But I did not take the put immediately. The reason I did not take was the first candle was so strong. I knew that pushing it down immediately was not possible. So I was waiting for a slight slowdown of the price. I knew that I am in for a put trade. I was not in a mood to go for a call trade. I was in for a put trade. But then I was not willing to take a position immediately because because obviously I had my own understanding of the data from last few days. And also this was a very, very strong candle in the morning. My immediate this thing was to let it go and let it settle down. And if you have seen our videos, or if one of you who has been in the previous classes, I keep saying that look at the strike. If it beats 25,000, go let it go for 2550. Maybe you have an opportunity to sell from 2550. And by then the price had settled, and by then you had a beautiful opportunity to sell or take a put, which basically resulted in an extremely good returns for you. Again, whoever has joined this class, please do not get confused. I will repeat all of this to you over the next few days. Okay, all that you have to understand is when I am looking at the data, how am I trying to make sense of this data? At 9:15, I see that they have built, but then I'm not confident to take put position yet, so I'll continue to observe. By 9:18, 25,000 still had a huge calls there, but the price kept going up and down there. It did not settle. Now puts were building. In just 2 minutes time, I see that puts are building and they are catching up. So that gives me another doubt, saying that okay, now that puts are building, let them go. Let them take it as far as they want. I know that I'm trying to take put position, so I want to just continue to see how long they will continue. So when you are in the market, this is all that you will do. You will try to understand what is happening with the price, who is stronger, and which way the price will go. That if you are able to understand, the market will become extremely simple for you. Now, today it was a little difficult. If you knew your levels, it would have become a little easier. But since you did not know, understanding this becomes a little difficult. Eventually, it will get easy to decipher this as well. But then let's look at some simple days, right? Because today is our first class. We don't want to complicate our class today itself. Now, I'll take you to some simple examples. You will be able to easily start making sense of this data yourself. On 6th of January, let's look at 9:15. Understand that calls are at the top, puts are at the bottom. So this is like price. If the price has to go up, puts from bottom should push. If the price has to come down, calls from the top has to push down. Okay, as simple as that. Call house is at the top, put house is at the bottom. If puts are strong, price will go up. If calls are strong, price will come down. As simple as that. Now looking at this, I would like you to think, I would like to just look at this picture and tell me what you think will happen to the price. I will open up the mics, but I want you to look at this image and tell me what do you think will happen to the price. Okay. Now, then the next important question to you is, how far down are you confident, or you can confidently say that the price could go? That is another important question. As a trader, if you want to be successful, it is not only important for you to say that I can say that the immediate pressure is sell and hence the price will go down, but you also need to have, with confidence, you should be able to say how far down can the price go, right? What do you think your confidence, what does your confidence say how far down the price can go? 23,950 you are saying. 24,000 for sure, and below that. But how? So if I ask you to invest your money today, right? And this is something that again I'll teach you in the 5-step process, right? We follow something called as a 5 things that are critical for any strategy. One of the things that we keep saying is, when you are taking an entry, you need to have clarity. How far do you think the price will go and where you are going to exit? That clarity has to be there. So if I'm asking you to take an entry now, you also need to know how far are you willing to travel. So if you are saying 24,000, you will exit at 24,000. Let's say that's fair. You know for sure 50 points for sure you'll be able to capture. So you will go only 50 points. Someone else said 23,950. Anyone else? Anyone else think that the price can go further down? Well, at this moment, if you ask me, the price just has to fall. Right? I am willing to go all the way up to 23,900 at least. I am not taking 23,850 out of the picture at this moment, but puts are not there, calls are there. So I am looking to go at least till 23,900 at this moment. So when I am taking my entry itself, I am looking at least 150 points in the morning at 9:15, right? That's my range. I want to capture 150 points at least today. However, as I continue with the trade, I will have to keep asking this question. I have taken my entry. Let's say 9:15, we all have taken our entries. We all have taken puts or call sells. Now, at every next minute or next 3 minutes, however you like, you will have to question your decision on how far you are willing to go. That's all you need to do. And then if you are confident enough to continue with whatever is your target, and then when the target comes, you ask the question again saying that is 50 points or 100 points more possible, or do you think that is your limit and you want to exit? That's all that you need to ask. And this chart will give you that answer, and with the trend line. I'll tell you about the trend line also, but let's stick to this. This will give you that answer very, very easily. So at 9:15, we all are confident. I am saying 900. Somebody said 950. Someone said 24,000. Let's look at 920. Now tell me, what do you think should happen? It's already at 24,000. Anybody, any idea what do you think should happen to the price now? Do you think it has power enough to still go further down or no? Right. So how I look at it, the way I look at it is I understand that calls are extremely strong in their house, but then puts are not strong in their house. The most important part is this is puts house. They should have their presence. Nobody's at home. Puts are not there. So if puts don't show up, the pressure from the top will continue to build and they will obviously try to push the price down. For me, I would be worried if the price doesn't, I would be worried if puts actually come back, puts actually build up here. That's when I'd be worried and I'd say, I'm not looking to go any further down. But if puts don't build up and call pressure is there, although calls don't build up too strong, they will keep pushing it down as far as they like. And that is what ideally will happen. We'll have to see what happens eventually if puts build up or not. They pushed it back a little. Now the price, what happened? It was at 24,000. They pushed it back to 24.15. Important, very, very interesting market action, let's say, or price action happened. You were actually bearish. The price went to 24,000, but then it again pushed it back to 24.50. If it pushed back to 24.50, it means that puts have come. Puts have definitely, entered into the market. That is why obviously they were able to push it a little back up. What's your opinion now? Would you continue with your trade or would you exit? The reason is here that they're extremely strong. It doesn't look they'll be able to, they have to take a lot of time for them to be able to beat this. The price has to be in that position for at least, let's say, half an hour to 45 minutes, given the kind of position they have built here, or they have to suddenly fall. If they suddenly fall, you're okay to exit anyways, because they're still strong. They're extremely strong and they're strong in the enemy house still. It's not like they have become weak. So I would continue, but I'd continue carefully. If puts continue to build, then I'd try to, whatever profits I have, I'll be able to book that and I want to get out. But if the puts don't build and if the price continues to slide down, then I'm in my position. I'll continue to trade. Let's see what happens. Okay, 24,000. They left. Again, we are back to 24,000. Now 24,950 is possible. 900 is possible. I am not very confident because they should have built a little more, but puts are also not there. So we can't blame. 800 is where they are building. I want to go to 900. I want to exit at least at 900. I'll go a little faster. 10 o'clock, let's see. Still it is 24,000 only. Okay, they're building a little bit. Okay, I'll go to 1030. We came to 950. At 950, now 900 has built a lot of put pressure. Now you think the price has come to 950. What do you want to do now? We're already at 950. Okay, we have come at least 100 points below. So what is your action now? What is your analysis now? Because puts are building, you would most likely want to book your profits at somewhere here. The only other thing I would look at is I would look at trend line. Okay, we were at 1030. At 1030, I would look at the trend line instead of only looking at this. I would want some kind of a reaction from trend line of, let's say, because at 930 we are at 4 million. I want at least a 1 million of reversal because we are at 4 million. So I'm willing to hold my trade looking at the trend line because here I know that puts have built, but they're not very strong. On this side, they have built extremely strong positions. So I would rather continue with the trend line for as long as the trend line does not give me a rejection. This is another big advantage you have with the trend line. You already are in profit. You want to make sure that you gain, your profitable positions. You want to win as much as possible. That is the important part. As a buyer, especially, you have to make sure you're profitable. Your winning trades, they win as big as possible. If you want to be successful, your winning trades must win as much as possible. The losing trade should lose as little as possible. For a buyer, because we are already at a huge disadvantage. For a seller, well, you can play with, of course, you can play with trend line. You don't have to worry because sudden price reversals are very difficult from seller's point of view, but this would still help you. So looking at this, I know that I want to exit, but looking at this, I will say that give me at least 500k of reversal and I'll exit. But then since that did not happen, I will just continue. And when it comes to 1113, I think I'm already at my, 900 is gone. 1113 is where I'm basically at 700, 23,700. I wanted to go only till 900. The price has come all the way to 700. When I was showing you this, I didn't even remember how further down this was going. I still had hopes based on the data that I should be able to go to 900 at least, but then the price has come all the way to 700. Now you would be able to capture it if you're able to follow the trend line and also you're able to follow this. At the time of an entry, you need to have a clarification. You need to have a clarity, a very good clarity as to if the price will move in your direction for at least 100 points, 50 points at least if you want to do a quick scalp and come out, or at least 100 points. If you have that clarity, already that is a huge edge for you. All you have to do is just sit back. So one of the strategy I'm already revealed to you today. All you have to do is look at the fourth chart. Make sure the bias is on your side. So if you want to take a put, it has to be negative. If you want to sell call, right, it has to be in the negative. If you want to buy call and if you want to sell put, it has to be positive. Make sure that bias is on your side. And then you just want to make sure that doesn't matter where price is, from ATM strike strike, you have a leverage of at least 100 points. If you think you have a leverage of at least 100 points and on your side the calls or puts have built up, then you're confident to cover 100 points to 150 points, whatever you are able to get. You need not rush. Let market reveal that setup to you. Take those trades. Believe me, as a buyer, if you take 3 or 4 of those trades, your targets would be achieved. So if you want to do stress-free trades, all you need to do is look for scenarios where the market is revealing to you that it is going to cross 100 points or 150 points. Take those trades and happily sit back and relax. Just observe, keep looking at the charts and see if you are able to, if that setup reveals to you again. It happens more frequently than what I have told you. And 100 points, as a buyer, I don't need to tell you how much percentage of return you could get depending on how far or how close you are from the expiry. All right. So one of the simplest strategy is observe the fourth chart, make sure bias is on your side, see if you have got a 100-point leverage, take it and then keep observing, and then you will be able to get your 100 to 1 for your targets basically would be achieved. As simple as that. Now that's not the only strategy. Obviously we will reveal more strategies to you, but then the idea is this will work with any other strategy for that matter. The other strategies that I reveal to you also, you will be able to follow the same thing. You will be able to say, okay, do I have a leverage of at least 100 points as a buyer? As a seller, do I have a leverage of at least 50 points? 50 points, because beyond that, even if the price doesn't go in your direction, if it stays there, you would still make money, right? Because time is your friend. The more time price stays in your area, you will be able to make more money. So that is a big advantage as a seller. But as a buyer, you have to be careful. You want quickly the price to be able to move to your 50 or 100 points. If you ask me, you should target 100 points. If you're targeting 50 points, if you're sure that it will go 50 points, you have to be a good scalper. You have to be very quick with your trades, and you should be very good with managing your capital and risk. So if you're able to do that, 50 points is good. If you think you are a good scalper, 50 points you would definitely be able to capture. Many scenarios will come. There are traders who are with us who do scalping. They see 50 points this thing and they deploy a lot of capital. All they require is 10-20 points price movement. They get that 20 points. They look for absolute sure scenarios where they can make that 20 points, 30 points or whatever, and then they just come out. That's how they do. And they don't trade too many days because they deploy a lot of capital. They make handsome returns and then they basically say 4 or 5 days if I trade, that's good enough for me. They have their portfolios as well, obviously. It is your risk appetite and the kind of trader you want to become. Based on that, you can decide. If you ask me, stick to 100 points. Don't be a scalper yet. If you already are experienced, you can look for scalp. Okay. Now, what I would also like to explain to you is that we have, for every trade, we have got a 5-step process. You need to understand this. I'll explain this again tomorrow when we start. The 5-step process is very simple. For any trade you want to take, you need to have clarity of 5 things. Doesn't matter which strategy it is. You want to go by price action, you want to go by trading view indicators, it doesn't matter. You need to have these 5 things really clear if you want to be a successful trader. 1, you need to know your bias. Whether you are going for call buy, put buy, call sell, put sell. That bias has to be very clear. Second, you need to have extremely good clarity on where you want to take your entry. Your entries have to be good. As a buyer especially, your entries has to be very good. And the third is, at the time of entry itself, you should know where your exit is. It is difficult for you otherwise. If you just look at price action trading view kind of a system, if I ask you to take a position here, you don't know where your exit is. But because now you have a system which basically can tell you your sell pressure and buy pressure, you know where your exit is when you're taking an entry itself. That clarity must be there. You should know how far you are willing to go for your exit. The fourth is stop loss and trailing stop loss. And the last thing is you need to also know how to identify sideways markets. All of this I will explain to you with every strategy we talk about. So as simple as that. If you know these 5 things, right? Bias, entry, exit, stop loss or trailing stop loss, and then sideways market. 5 things if you are able to confidently get a grip on, you are already a good trader. Those 5 things for multiple strategies, for different strategies, we will always evaluate these 5 things. And I will tell you how you will be able to get better at analyzing these 5 things or reading these 5 things for all the strategies that I'm going to reveal to you. Remember, that's how we will work. If we have confidence with these 5 things, we can confidently take our trades.